Hi everyone, Michael Lawrence here. Welcome to this Asia House digital event. Very good to have you take part. Today, as part of our Middle East program, we're focusing on Dubai International Financial Center and the future of finance in the Middle East, Africa, and South Asia. I'm delighted to welcome Arif Amiri, who's Chief Executive Officer of DIFC, who will shortly get us underway with an opening address. We'll also be briefed by Ali Hassan, who's DIFC's Senior Representative for Europe and North America. Ali spoke at an Asia House event at the end of October of last year, in the days when we did in-person events face-to-face. It's good to see him back, albeit digitally this time. Now, DIFC is working closely with the UAE government in a coordinated effort as the world grapples with the COVID-19 pandemic and its consequences. And while the pandemic is clearly the most immediate and dominant issue in almost all of our discussions these days, we've asked our guests to look beyond the health crisis and give us a sense of the shape of finance and what shape that might take in whatever is the new norm and opportunities that may arise from it. Now, today's session is on the record. I repeat, it's on the record. Many of our sessions aren't, but this one is on the record. We're recording it now, and we're going to make that recording widely available. If you wish to ask a question, and we encourage you to do so, please let me know via the hand wave icon that's at the bottom of your screens. I'll bring you into the conversation when we open it up for questions, and we very much welcome your involvement. So please don't hesitate to take part. Questions and comments very much a part of our discussion. So now it's my great pleasure to hand over to Arif Amiri, who's the Chief Executive of DIFC, to get us underway.
Thank you so much. Good morning, everyone. I hope everybody's doing well and everybody is safe. It's really a privilege for me to be able to interact with you all during such times, when face-to-face is kind of restricted, but then we are able to do that through our digital channels. So really glad to be here. If you allow me, probably I'll take a minute or two just to probably provide an oversight or maybe a high-level brief in terms of who we are and what we do. The Dubai International Financial Center has really been established in 2004 to really connect global economies and global financial institutions to regional opportunities within the region we serve. We define the region we serve being the Middle East, South Asia, and Africa, of course. Today, we've been blessed to be ranked number one in the MEASA region as a financial center, and that's a testimony of the community we actually serve and the prospect of opportunities that are actually being unleveraged or leveraged from the center itself. So in the first 10 years of our lifespan, where we are a young financial center, even this year we celebrate our 16th year. But in the first 10 years, our mandate was to really develop core segments within the center, whether it's banking and finance, asset management, or wealth management, or the insurance, reinsurance industry as well. And we've been able to develop an ecosystem of over 1,000 institutions that are based in the center. And we've been able to develop a depth of business that was around approximately $50 billion that's banking assets within the center that are being facilitated. But however, since 2014 or early 2015, we've embarked on our 2024 strategy, which had many pillars, and one of them deepening the core of the activities within the center, and that leveraging the institutions that are actually based in the center to do more. So best regulations in class that we've seen globally being adapted within the center to enable that to happen. So we've seen the balance sheets actually move from $50 billion to north of $170 billion in the last 5 years. We've seen the insurance premiums being booked within the center actually go from $1.2 billion to around $2 billion as well. While we see the challenge within that sector in specific, but yet there's growth that we've actually been experiencing in the center. We also had an aim of actually tripling the size of the center from 1,000 entities being registered and active in the center over to around 3,000 entities. Today, we roughly stand around 2,500 entities being registered within the center. So that's really beyond, or we're overachieving our targets on an annual basis. And that just really reflects a bit of the opportunities within the region we actually serve. So now, but within the past 3 or 4 years, we've also ventured into the future of finance. And the future of finance for us, what it means is really enabling our community to engage their clients and their prospects in a way that's a bit more efficient and more streamlined. And the only way we thought we can do this is to actually engage the tech players or the financial technology players alongside the community members and across all streams. And we ventured into the first regional accelerator, the FinTech Hive, which started with just around 100 applications in year one. And today, in our last cohort, we've received over or nearly 500 applications from all around the globe, whether it was Hong Kong all the way to the US and the UK, of course. We've had from about 10 finalists within our first cohort to now today standing about 40 finalists as well. And our ecosystem that was nearly not significantly presence of fintech players within the center, which was really near zero, but today stands over 160. And we've seen the ecosystem actually develop and build. So we've seen the introduction of an accelerator complemented by an incubation program as well. We've issued a fund of $100 million to enable access to capital for these startups or these innovation players as well. And of course, an ease of licensing as well as a workspace solution that are actually tailored for them to actually thrive in. So this is actually developed quite well. We've seen multiple or many of proof of concepts being signed within the center itself, and we've seen quite a bit of activity that goes beyond Dubai itself into the region. So we've been able to actually engage with one of the largest markets within the region, which is Saudi Arabia as well, into driving the future of finance mandate. We've done a bit of an acceleration programs there as well through the FinTech Hive. We've been able to collaborate with Startup Bootcamp, which is a global brand when it comes to driving the fintech ecosystem. And we've also been able to partner up with great players from the UK, such as Smart Pension, to drive our defined contribution scheme as well. And that has always been, enabled by Smart Solutions. And personally, I do foresee that trend to continue. And I think the investment in technology and digital will continue to really shape what we do in the region and shape the industry of finance within the region. That seems really promising for us. So with that note, I'd really like to pass it to Ali Hassan to probably provide a bit more detailed overview in terms of what we do and how we run things within the center itself. And then probably answer a few questions probably then after to Dan as well. Ali Hassan, over to you.
Good morning. Thank you very much, Arif. And thank you for everyone that's joined. As Michael pointed out, I was at Asia House at an event last year, and we had a room of 25 to 30. Today we are digital, but we have an audience of around 60. So I think that in terms of the impact of COVID-19 and the adoption of digital ways of doing business, I think it'll only increase engagement, rather than decreasing it. So I'd like to just share some thoughts that we have around what the future looks like for firms that are looking to engage the markets in the MEASA region, and the implications in particular for digital finance. Now, if we look at the opportunity in MEASA, we have certain core fundamentals that are in place. We have a region, as Arif has mentioned, of growth economies. We have the GCC, where economies continue to be diversified. And what has happened recently, we don't see that impacting that particular trend. In many ways, you could say that if you're looking at diversification in the GCC, the current circumstances will increase and accelerate that trend. If you're looking at, you know, the growth of economies in the region, there will be impact in the short term, but the long-term trend looks set to continue. And you have the IMF, for example, indicating that India is projected to grow at 7% in 2021. Now, of course, the demographics of the region are very supportive. So you have a very young, tech-savvy, urban population. In fact, 40% of the population is under the age of 25. Very open to digital channels, very open to digital solutions. And I think that will certainly be the case going forward. And of course, the region, and Dubai in particular, has worked very hard to put in place the infrastructure to support businesses and now and in the future. So just turning to that longer term, if you like, track record of growth. Over the period of the last 2 decades, in fact, MEASA has had above trend growth rates, and it's in comparison to developed markets. And because of the core fundamentals that we just covered, it's reasonable to suggest that that outperformance will continue. And hand in hand with economic growth, we've also seen significant growth in financial services, of which, you know, the DIFC is very much part of. And we will see that continuing with more digital. And in fact, I think that the current circumstances again may give rise to some short-term developments or opportunities. So for example, in investment banking, you're seeing activity in the debt issuance market as sovereigns, companies and businesses look to secure their financial footing going forward. Also, there is opportunities arising in restructuring. And, you know, I've noted that a number of the investment banks are increasing their talent pools in those areas, and we have a number of investment banks that specialize in restructuring already based in the DIFC. And in turning to tech and fintech, we've seen significant outperformance, if you like, in terms of the investment coming into the region, into the MENA, into UAE over the last 5 years. Now, albeit it is coming from a smaller base, but I think it reflects that actually our digital markets are relatively underpenetrated at an earlier stage of growth, and therefore the valuations and the investment opportunity is appealing. And the capital has come from a variety of sources: regional, international, sovereign, government, venture capital, private equity, and indeed private capital. So given that the fundamentals remain in place, you know, we think that the proposition that this level of investment will continue holds. And then, so if the MEASA opportunity is still valid, and we certainly think so, then Dubai is obviously that strategic location that everyone recognizes, that natural link between Asia, Middle East, Africa, and through to Europe. And it gives this access to this really interesting population mix, right? So you have very, very high wealth, and then you have very, very low levels of wealth, and that spectrum provides significant opportunities for different digital businesses, whether you're providing sophisticated wealth solutions or looking at banking capabilities for the unbanked, or indeed, looking at novel insurance products that provide, the safety net that people need. And Dubai's background as this trading hub, through that we have seen capital, as we've mentioned, but talent and the general entrepreneurial dynamics that support innovation. And this is what we've seen play out in Dubai over 4 decades. So it's a very long-term trend. And obviously, during that period of time, we have all experienced regional and international crises of one sort or another. But that trend has continued throughout. And in terms of building on that, as Arif has mentioned, so I'll move through this fairly swiftly, but building on its commercial heritage, Dubai has worked very, very hard to put the infrastructure in place to support business, to attract and retain talent through its healthcare, lifestyle and education choices. And the rankings that you see on this slide, I think, are testimony to that. I mean, it's really interesting that 70% of Fortune 500 companies have their headquarters for the region in Dubai.
Oh, they certainly try, but we can't see a slide. You might want to share that screen.
Oh, you can't see that slide?
Nope. We haven't been seeing the slide, so why don't you try sharing your screen? Yep, got it.
Okay, excellent. Okay. Okay, and then Arif has mentioned FinTech Hive. I mean, that is certainly our nexus for engagement with the digital community, provides ready access to potential clients and sources of capital. And going forward and up until now, we see opportunities right across the financial services spectrum in terms of the various businesses that are out there. And I think that, again, the recent circumstances, the recent developments will only accelerate adoption of digital solutions as people look to be efficient and look to increase market engagement and provide enhanced customer experiences. I think the other interesting aspect that I'd like to mention is that e-commerce, which has been a really significant driver in other regions, Europe, North America, has only recently really, come about in the UAE and wider region. I think there's a lot more potential there and a lot more to come. And I think e-commerce in of itself precipitates new products and solutions, and we've seen that elsewhere, and we think that that's very much going to drive some of the opportunities in our region. And one example that's linked to e-commerce is, of course, payments. And so with payments, we have made some specific concrete steps to support the development of the sector. And actually, this is an example of where we are still working hard with the community to develop what we have, even in these times. So obviously, remittance is a significant business opportunity in the region, and payments is a significant element of the digital finance stack that we have. And just this month, our regulator, the DFSA, our independent regulator for the centre, has issued comprehensive payment regulations that cover money transmission, issued stored value, and e-commerce mechanisms. We also know that eKYC and KYC in general is expensive in the region. So we have looked to support the development of digital solutions. And one example of that is Norblock out of Sweden, that was in fact accelerated within the Hive ecosystem and now provides the market with a blockchain based KYC solution. So in summary, I think that the opportunities for international expertise will continue to grow, supported by the fundamentals and the conducive infrastructure that is in place. And of course, one firm that has made that move into Dubai and the DIFC is Smart Pension. So I'd like to hand over to Dan, and I look forward to the Q&A.
Thank you, Ali. Yeah, hi everyone. It's a pleasure to be on this panel. So thanks to Asia House and Ali and Arif as well at the DIFC and all the guys who've and all the participants who've joined. Looks a good number there. So yeah, so we're actually active and involved in the DIFC. So we're really excited about it. So it's probably worth just speaking for a few seconds on who we are, and then take you through some of the reasons why we consider the DIFC a really excellent place to start and scale, from our perspective, a technology business. So Smart, or in the UK, Smart Pension, we were born out of a large pension reform in the UK about 4 or 5 years ago, where everybody in the workplace was broadly signed up to a workplace pension. So 10 or 11 million employees across the UK had to be signed up in a given period. And so there's an opportunity there, because typically the market was smaller employers who don't typically engage with financial services or pensions specifically. We're going to find it very difficult to comply with that legislation. So there's a real technology opportunity. So out of that, we established our own pension fund, which is quite unique in the UK. But we built, as a UK fintech, our own end-to-end pensions, defined contribution pensions and savings platform, which is truly digital. All the things you'd expect from a modern digital platform: automation, low costs, business processes that suddenly are no longer involve human beings, that completely disappear into the background, straight through processing, and obviously a real focus, importantly, a real focus of designing a system with the users in mind, be it that the saver themselves, the employee, the employer, the advisor, trustees, that kind of thing. So it's a really, really modern way of looking at pensions and retirement. So, and our kind of relationship with the DIFC is that we're absolutely delighted and proud to be involved in the Dubai Employee Workplace Savings Program. Our platform is being used by Zurich as the administrator for the dues program to drive those reforms forward, and I'll touch on those in a little bit. And Smart as a company, we're in the UK, obviously, DIFC, Ireland, we went live last week, US rolling out now, and Australia as well. But that's Smart. I'll probably spend 2 or 3 minutes. I think I've got a few areas where I just thought about this. How would I kind of set these thoughts out? And I think I've got a few areas around doing business, kind of progressive thinking, and more importantly, I think from my perspective, how the DIFC really is aligned with our kind of scale and international growth plan. So one of the things which we do in analysis in terms of where do you base yourself, where do you invest, where do you look for opportunities? The certainty of doing business in the DIFC is a really, really strong point. I think Ali mentioned independent regulator, the DFSA, who you can engage with as well, which is absolutely fantastic. Independent judicial system. These are really kind of fundamental points where you're considering where to place your investments overseas, because there's many options and there's a global market there for us, which is fantastic. But that really was an important factor, the certainty of doing business in the DIFC. And I think another aspect of doing business is the ease of doing business. So the guys have referred to the FinTech Hive in the DIFC. So we are established through the FinTech Hive, incorporated through the FinTech Hive. Fantastically, incorporation in other countries can take a long time. and you can get snarled up in red tape and have to throw quite a bit of resources at that. But in the DIFC, we found completely opposite experience. Going through the FinTech Hive specifically from our experience, setup and incorporation was rapid, which was important to match the timescales for the dues program as well, rollout. So that's a real strong point in terms of where you think you might establish a presence in the Middle East region. Setup of the DIFC, really rapid. And I think just the point, I think some of the points have been made, so I won't labour this one, but it's the progressive thinking and mindset, technology adoption, looking at the future, looking to be the best. I mean, that completely aligns with our thinking as a technology business, and it must align with almost every technology business on the planet who's thinking of improving financial services out there. So there's a few areas which I think really resonate with me and smart. But just a few areas where, in terms of scale up and growth, you know, we are a fast growing UK fintech. I mean, I think we were only incorporated in the UK 6 years ago, and here we are in the UK with our own pension fund, with hundreds of thousands of employees and tens of thousands of businesses with hundreds of millions of pounds of assets, and a technology platform which is now exported to a number of markets and has got real significant global demand. So we need to keep up and be able to meet that demand, and we think the DIFC is a real key anchor for us to be able to do that. So just a few points about kind of the platform. I think the tech adoption and being involved in the dues program, the Due by Employee Workplace Savings program, I think that was a fantastic opportunity for us. And I think it's just, and I know it's quite stressful times, but it does provide, kind of picks up on Ali's point around, it's a case study in terms of truly digital financial services need to be able to operate in kind of every single environment and every single condition. And I think when you are a technology businesses, those points I made before, you design things around the users and not maybe yourself and how you like to operate internally as a business. It's more about the actual members and the employees, etc. You can continue to run a scheme. So we rolled out the dues program in the midst of COVID-19, and Zurich, as the administrator, were able to continue to administer the scheme as if it was normal conditions. It's not normal conditions, but I think that's in stressful times and chaotic times, it's a good example of how digital services can continue when others may struggle with different setups. And I think just in terms of some growth points as well, you know, DIFC has got a great ecosystem of potential clients and partners, be them technology partners, you've got financial services, all being mentioned. I mean, that is a fantastic ecosystem of opportunities where you can really look to accelerate your growth and your business. Fantastic. And then you've also got, from our perspective, the way we see the world, we have a number of markets we're interested in, and we have a number of global hubs. Obviously, UK being a UK fintech and a great pensions market anyway, and financial services market. We've got another global hub in the States, Australia, but we also considered to include the DIFC, Dubai in that, DIFC specifically in that network of 4 global hubs, which can act as launch pads for our growth. And the reasons we did that are all those reasons I've mentioned before, but also because it really gives us fantastic access to the Middle East in terms of market, obviously South Asia and Africa, and it's a fantastic launch pad, like I said, for those markets. And we're doing a piece of work in South Asia as it happens as well. So, and you know, linked to that, if you look at a map of the world, the US on the left, the UK there, and Australia there, the DIFC is a great geographical location for a kind of 24/7 global service delivery model as well. As we expand rapidly, we need to match going live with platforms here, there, and everywhere, the ability to service our clients effectively. And it really does provide a fantastic location for that as well. And finally, I would say just any fast-growing company, you know, we will be moving into a Series D funding round as well. So, and the reason for that is just to kind of meet this global demand. You know, why wouldn't we go for that? And obviously, we consider the DIFC has probably got a strong role to play in terms of in capital and fundraise as well. So I think that's, in a rapid order, that's kind of how I see the DIFC, from some elements of doing business, progressive thinking, but really being able to drive and scale up fast-growing businesses internationally. That's how I see the world.
Jan, thanks very much, and thanks to all of you. Very comprehensive overview of DIFC and some of the opportunities in these chaotic times. I do want to turn it over to questions now. We have more than 80 people on the line, so I'm sure there'll be a few already. A couple of people have indicated they want to ask a question, but just a reminder, if you do wish to ask a question, press the hand wave icon at the bottom of your screen. That will flag it up to me and I will come to you. But Marjan Delatinne from Ripple was keen to ask a question. So Marjan, I'll come over to you now, please. Marjan.
Yes, hello. Good morning. Can you hear me well?
We can.
Okay, great. Well, thank you very much indeed, gentlemen, for sharing your insights. Well, as mentioned, I'm working for Ripple, so obviously my main interest will be to better understand how, considering the fact that UAE has been a leader in the digital assets and regulation around that, and many countries are following actually the DGM's lead, has the DIFC considered its digital assets or blockchain strategy so far? Any insights would be interesting. Thank you.
Yeah, Arif, I wonder if you want to take that, and then Ali.
Sure. Well, thank you, Marjan, for the question. We at the DIFC we've been pushing the mandate of the future of finance across. So we've been actually leading in many conversations across various sectors of blockchain, as well as the digital assets as well. So our regulator has been actually quite active in terms of pushing through various chain of policies, one of which recently has been on the payments policy, which we've been able to really house a good number of digital payment solutions within the DIFC and enable the digital solutions be actually driven out of the center itself to actually cater towards the regional demands we've actually been seeing. Of course, Ali Hassan also mentioned about the KYC mandate that we actually pushed out of the center was been also adapted beyond the DIFC as a jurisdiction, which enables the banks as well as the financial institutions to utilize the KYC solution that's been introduced by one of our fintech-based providers within the fintech hive. And it also signifies the model where a PPP model where there's a public-private partnership in place that enable the DIFC as well as the KYC provider as well to engage the financial institutions within the center and beyond to implement this across. So we've seen a number of these initiatives have been introduced as well. And then with the 150 fintech players that are actually based within the center, we've seen a tremendous amount of proof of concepts that have been actually signed up by the financial institutions within Dubai, within the UAE, and actually across. And we've seen a number of those fintech players within the hive itself, in fact, grow to neighboring economies, whether it's in Saudi Arabia or as well into Abu Dhabi and other markets within the region to actually expand their business and their book as well. So we've seen an outward projection of the community within, and it's all been enabled by the platform that's been introduced through our regulators as well as the authorities within.
Ali, anything for you to add?
Underline that the region, just like in Europe, you have multiple tech hubs in Europe. London is clearly a significant hub, but there are others in the region, and similarly in the Gulf. In fact, I've been involved with the DIFC for 15 years. And we really are an agent for change, we have been promoting international standards, from day one, and it's pleasing to see other cities or locations adopt a similar approach. But everything about Dubai is pushing the boundaries, developing further, enhancing further. So we're confident that the regulatory system will evolve in a sound and prudent manner, but also will facilitate the entire range of digital products and solutions.
Okay, thanks very much. Now, a couple more questions. We'll queue up Roxana Mohammadi and Melina from Blend Network. I'll come to you next, Roxana, followed by Raj Kulasingham from Dentons. But Roxana, your question, please.
Hello.
Yeah, hi, we can hear you.
Hello. Thank you very much, Michael. We talked about, the collaboration with the UK. Arif, I think, in particularly touched upon this, and I was wondering if there is any formal framework to this collaboration. I'm thinking, of things like the Tech Hub, like the DCMS, International Tech Hub Networks, and I think that there is not, that doesn't exist, but is there any plan for that, and what other formal kind of collaboration apart from, collaboration between companies, but is there like a network or a formal framework for this collaboration at the moment, and what are the plans for that?
Shall I?
Yeah, Ali, take that, please. Yeah.
Thanks, Roxana. I mean, it's very much part of our approach as a financial centre, and in particular in relation to FinTech Hive, to reach out to other markets, to collaborate and really, grow the pie for everyone. And I think that's from a UK perspective, DIFC in Dubai has always been about exporting expertise, retaining and growing business, and that's very much our approach. We have actually signed a number of MOUs with other fintech hubs. So in the UK, we've signed an MOU with Innovate Finance, which facilitates collaboration around information sharing, information awareness. But we are keen to actively look at the depth of those relationships to see if we can do more. We'd love to be able to, on a mutual basis, look at, for example, lowering the barriers to entry even further. Because there is flow. We've talked, Dan has talked about flow from the UK to Dubai and DIFC, but we're also developing regional fintechs that are going to have international ambitions. I mean, Kareem, that was acquired by Uber, is developing its payments offering, and they're going to be based in the DIFC, and I'm sure they're going to have international aspirations. So yeah, I mean, we're very much for collaborating across jurisdictions.
Arif, anything to add?
Well, thank you for the question. I think, we look at the history of the DIFC and understand the lifetime of the DIFC. We've been able to actually sign over 200 MOUs, and that's really across different bodies, different associations. And when it comes to fintech specific, we've been able to actually capture as well across different geographies, whether it's within Singapore, whether it's in the UK or the US or Western Europe as a whole as well. So there's different structures we've been approached, whether it's through the FinTech Hive or DIFC as an authority or our regulator as well, or through even the academy, which we actually push the mandate to raise the awareness of technology and financial technology and its impact on the financial services as well. And the way forward. So the framework of engagement and enabling collaboration through MOUs had already been in place. And Ali mentioned about the cross movement of entities and businesses from one jurisdiction to another. So that's been one of the things we've actually been encouraging to address through these MOUs we've actually established.
Okay, thank you. Now, just a reminder, if you want to ask a question, please just press the hand wave icon at the bottom of your screen. But I have a question now from Raj from Denton's. I'm just trying to find you. There you are. Raj.
Okay, hi.
Sorry, you're on. Thanks.
So listen, I'm interested to hear more about KYC and the opportunity for digitization. So my experience with KYC everywhere in the world, and most recently in Mauritius, is that it's still a very old-fashioned send your email, send documents by email, and then after all the pain of sending documents by email, then by the way, you have to send hard copies by courier or pigeon or whatever it is. And I'm still being chased for hard copy documents. And I keep saying that, do you realize we're in a global pandemic? So my question is kind of, what are there's a huge opportunity, I think, for all jurisdictions to do KYC through digitization and using different technologies, and especially facial recognition technology, where you don't have to physically touch anything, right? But then there are concerns on privacy and all the rest of it. So I guess my question is, what's happening in Dubai in this space? I know one company that's doing it in Africa, and I have a personal interest in that. But also, what are the opportunities for new entrants in this space, and what's the regulator doing to create more opportunities in this space?
Sure, Ali, yeah, go for you, please.
Thanks for the question, Raj. Well, for my sins, I was actually I am a former financial regulator, right? So I was with the DFSA in the DIFC for 8 years, and I was with the FSA in the UK for 6 years. And I know, so I have an insight into the challenges that regulators face, and I think that there is potential for work to be done around a proper risk-based approach and adoption of digital solutions to identity verification and also ongoing KYC. On behalf of the DFSA, I would say that they are very open to looking at the options within the remit of their objectives, of course, and responsibilities. But I do think it is an opportunity for regulators to bring into the current and have ready for the future, how we look to address KYC currently. So I think, and as I mentioned, we are seeing digital solutions come to Dubai and the IFC. I've actually personally dealt with a digital identification entity out of Germany that has already signed up banking clients in Dubai, and so there is momentum, and we'd love to engage with you, to see, to hear more of your thoughts, and and see how we can perhaps support your efforts. Great.
Maybe we'll talk offline. But my question, I suppose the question I had was, is there a set of rules, ground rules on how banks or trust agents or managing agents should be dealing with KYC that's uniform? Because you can have different people that are having different approaches, and I like the risk-based approach, because I think the problem with KYC today is that someone's told them that they need a few pieces of paper, so they all go out and get those pieces of paper, which are actually understanding what the risks are that underlying those pieces of paper. So I mean, I don't want to sort of hog the whole thing, but maybe that's one more thing I want to just talk about before I jump off.
Absolutely, Raj. We can discuss further, perhaps away from this webinar. But thanks for raising the point.
Okay, let's move on. Just a reminder, if you want to ask a question, just press the hand wave icon. I now want to go to Padmanabhan Gopalakrishnan, who's with Oracle, who's fired me a couple of questions on the chat, but let's hear from you, please. But nope, seems to have gone. Seems to have gone. Roxana wanted a couple of questions. So Roxana, why don't I go back to you for your next question, please?
Thank you very much, Michael. I think we also talked about, you know, the opportunity. Well, we talked extensively about the opportunities, but going back, you know, to the collaborations, I agree, completely agree with you on the opportunities. And in fact, I write extensively on this. I'm a chief strategy officer at a London-based fintech company, Blend Network. We are a peer-to-peer property lending platform, and I completely agree with you on the opportunities. I just wanted to get a little bit more understanding on the regulatory side, because obviously from the experience in the UK, and Ali, I'm sure from your experience also on the regulatory side, you would agree that regulation really is one of the key, you know, cornerstones for the success in this business. And I think, you know, one of the reasons that the UK has been so successful is because the support from the regulatory authorities. So I just wanted to understand, on the regulatory side, what, you know, work is being done specifically on things like, you know, the sandboxes. For example, we saw in Saudi Arabia the approval by the Saudi Capital Market Authority, the CMA, of the financial technology experiment permit. So I wanted to understand similar, you know, policies in that market that will support this ecosystem.
Thank you, Roxana. Yeah, I mean, absolutely. FinTech Hive, as I was outlining earlier, has a range of options for firms that are coming in, and that includes, you know, for startups, accelerator programs of various cohorts every year, and our new scale-up program, which has actually launched this year. In 2020, and gives access to you know, potential funding from, you know, VCs that sit on or are part of that program. Our regulator, the DFSA, has the equivalent of a sandbox approach as well. So to look to limit certain of the regulatory requirements, to look to delay the imposition of some of those requirements for firms that are, you know, innovating in the financial services space. So you see that mechanism, that platform is very much in place, and we're, you know, in active dialogue with the DFSA as to how it may be, you know, further enhanced, you know, to maintain our position in line with international standards. You know, looking at the good things that London, Singapore and others have obviously achieved. So our regulator has put in regulations. We mentioned payments, but also for crowdfunding, for crowdfunding in relation to property as well. That was put in place back end of last year. So the DFSA is very much moving forward, updating and enhancing its regulatory regime, but is also very open to dialogue with market participants. So there's an opportunity to shape and influence, the developments in the DIFC for sure.
Okay, thanks for that. Let's now go to Ali Ahmed from London and Capital. No, doesn't seem to. Oh.
Good morning, gentlemen.
Yeah.
Good morning.
Hi, thank you for your time this morning. Just a very quick question. As we look after clients internationally, being an FCA and SEC regulated firm, whom should we get into contact regarding offering our services to the DIFC?
Ali, yes. I mean, I'm actually based in the UK. I'm ordinarily in London, but locked down in Buckinghamshire at the moment. But I'd be delighted to engage in person as a as a first point of contact, and then through me, I can facilitate engagement with the DFSA, of course. If you were looking to a presence in terms of a regulated entity. But yeah, happy to engage, and I guess we can stay digital for now, and then meet in person in the future.
Okay.
Of course, thank you.
Let's go to Eugene Sadovsky now. Eugene.
Hello, good morning, gentlemen. Thank you for the presentation. Ali, I believe you are familiar with the FSA. My question is, we obviously see a huge increase of Gulf companies in electronic money institutions and other financial institutions in London, in the UK, and Europe in general. When can we expect a equivalent of an electronic money institution license in Dubai, or that will enable clients to issue payment cards in the region? And how open is the regulator going to be towards European businesses and UBOs? Thank you.
Thank you for the question, Eugene. The payment regulations that the DFSA has implemented as of this month cover the issuance of stored value, the transmission of money, and other e-commerce facilitating mechanisms. So the regulatory regime is in place. The DFSA is open now for engagement, and we can facilitate that. We have been very prudent in our approach, so it hasn't been there up until now, and we've been looking at how we can make a proper approach and a sound framework. So not really rushing to market. We've taken our time, but we believe where we've ended up is a very comprehensive regime that should be conducive to the market whilst maintaining regulatory standards. So very happy to engage, Eugene. We think we have in place what e-money businesses need. So we're happy to initiate the conversation.
Okay, thank you. Charlie Humphreys now. Charlie.
Thank you. First of all, I hope all of you are well and safe in this, and your colleagues and families in this difficult time. Thanks for your insights. I had a question about innovation, especially in the context of the current crisis caused by COVID-19. Ali, you mentioned how we sort of changed the way we're doing things to be on a digital platform, and that sort of provided some additional benefits. Obviously, we know that the UAE and Dubai particularly have been a very sort of innovative place, especially in financial services, but in sort of a wider range of business services. I'm just sort of very curious to know, and keen to hear from all three speakers, really kind of what the opportunities for further innovation, especially given obviously there's so many changes in the way that business is being conducted, the pressures that businesses are under. As you mentioned, there's a sort of short-term impact of COVID-19, but as the as we move to a sort of longer-term framework, obviously the companies are going to be looking at how they do things very differently. And are you specifically putting in place in Dubai kind of anything that will facilitate sort of further innovation, especially in financial services for the region that you're looking at? For companies who are needing to adapt, and also new market entrants who want to try and find new opportunities associated with the new normal, basically.
Well, thank you, Charlie, for the question. In fact, one of the most our highest priority was really to ensure that our community members are able to really have their businesses operational during all times, especially when times are a bit challenging, like the situation we see today. And in the past 3 years, with introductions of initiatives like the FinTech Hive, the incubation program with Startup Bootcamp, the $100 million fund to enable these startups to actually engage, the sandbox, and the agile or efficient licensing regime that we actually have, is to ensure that the cluster of innovation is actually present within the center, and for all the community members to be able to engage and be able to actually have good conversation around and about how they actually enable their business to actually do well during normal circumstances and beyond normal circumstances. If you know the region well, you'll also know that the penetration of financial services within the region as compared to developed economies is quite low. So if the wider region in MEASA, for example, you look at 30% of financial services penetration, while you consider the same ratios in Western Europe or the US, where it hovers about over 90%. So there's a huge opportunity here for technology to really influence the financial services activities and within the wider region. And from our perspective, there are a few things that we need to do well. First, to ensure that we do not impose a regulation that stop the innovation from actually tracking forward. So therefore, elements like the Sandbox Initiative or the innovation testing license that we have with the DFSA will help enable and experiment with new solutions that are being proposed by fintech companies across all streams. And we look to actually enable that even further. We also need to ensure that accessibility is available, and accessibility whether through digital or not. So digital, we've actually invested quite a bit through onboarding our clients digitally through the DFC, through the center. And by doing so, you enable them to actually engage in the wider region and engage in the community we actually have and the opportunities that are there in the region. Thirdly, we should also ensure that the ability to have conversations around what's important to really be available. So our investment into ensuring there's a lot of engagement between community members across the sectors we serve are up and running. So these are the three things we think are going to drive, the mandate of the center and the community members from the center and beyond.
Ali, let's get your view, and then Dan will get you.
Yeah, I mean, I think Arif covered it very well. I would just flag the Dubai Future District that Arif mentioned in his opening remarks. I think that's really, really exciting. DIFC is part of that, and it's really Dubai government, promoting the future economy and looking to attract companies that are involved in financial services, but also, in the other segments, tourism, hospitality, logistics, and really concentrate that engagement in that physical area, and provide support through funding and engagement with regional entities. So I think that's really, really exciting. Launch this year, in fact.
Yeah, Dan.
Yeah, just different perspective, but in general, normal conditions, DIFC is a great place for innovative thinking and thinking out the box and trying to solve problems that may be different. So with the pandemic, maybe it accelerates decision-making processes. So in organizations out there, the new normal might drive people's digital transformation programs from something on a slide deck that they'll get around to actually something, we really need to do this and do it in a shorter timescale. So in things in terms of innovation, in terms of the opportunities, I could see them increasing. I also think if there is kind of a spike of innovation on the back of pandemic, on already a kind of a large baseline in the DIFC, then it's great for technology companies because we can work together as ecosystems. Guys on the call will know, from our perspective, pensions, retirement, payments in and payments out is a big block of that kind of value proposition. And the more kind of innovation around that, the better. KYC are the same, and from the DIFC, we'll be ideally accessing markets which are not the same shape and size and feel as a European established financial services market. It could be in South Asia where people don't have a bank account, so you might be looking at different approaches, mobile only interface with users, microfinance, different types of payments. So, and obviously the challenge there with KYC and ID in some of those markets. So I think, and they're big markets tend to be. So the innovation, if this drives forward innovation, I think it only magnifies the opportunity for technology companies, and it sharpens the pencils, I think, of decision makers in organizations.
Thank you very much. Look, we're just about out of time. Just one final question from me to each of you, if you don't mind. COVID-19 has accelerated innovation, most likely to accelerate innovation in the tech space. Does it also need to accelerate, though, the role of regulators? Do regulators now have to become much more of a business development arm as opposed to imposing regulation on technologies that are moving very swiftly? Or are regulators going to struggle to keep pace with this new, more rapid changes in digital technology driven by the need because of the current world circumstance? I'd like to go to each of you, and Arif, I wonder if I go to you first.
Thank you, Michael. Absolutely. I think it's so important for us as a center to really be able to support our community members. And we do that in many ways. One, by introducing fiscal easing initiatives to relax, to have them be able to actually maneuver during these difficult times. So whether it was on the licensing fees or the rental payments, or being able to access the center safely and soundly if they need to as well, to ensure everything there is streamlined for them to be able to do business. And the same thing has gone across all the center bodies within the center. So see whether an application allow extended time for them to actually put them through their applications, allow more the adoption of more flexible solution, even when it comes to a workspace solutions that they might be needed. The most important thing is to really remain connected to your community members and be able to understand the requirements as well. So we've also issued a survey to our community members, asking them their needs and their wants. So it's a combination of both initiatives that are being done by the center to actually facilitate the needs of the community members, and also by making sure there's an ongoing dialogue to ensure they're able to actually go through such times as well with ease.
You're on mute, Michael.
Yeah, sorry. Shall I go? I mean, from my perspective, I would just highlight that I think it is important that a regulator is independent and that it is not part of business development. You know, too many conflicts arise from that. But I do think financial regulators do need to look at their internal capabilities, make sure that they have the proper skill sets in place to judge soundly new developments and the regulatory questions that they arise, and to judge soundly in a timely manner. So I think they should be independent, but they need to have the proper capabilities.
Michael, you're on mute, by the way, so
Sorry, you're right, man. So final word to you, as someone who's a practitioner and operator in this space, what do you want to see from regulation in terms of business development?
I think just going back to a previous life where in the UK government side, where it was early stage, peer-to-peer lending was emerging, so this is quite a few years ago, as you can imagine. And the one things financial services, especially innovative new things, they crave regulation, they crave a license of sorts. You need that to be able to gain the trust of customers or partners. So that's fundamental, and the independence point is absolutely key. The regulator there should be a clear line between the market and any regulator for a well-functioning system. But at the same time, you know, they see the sandbox and bits and pieces, and some of it's rhetoric, some of it's real in different parts of the world. Regulators do need to keep up with what's going on in technology and not see it as a threat, because ultimately, you know, fintechs especially, you know, I always say this quite a lot, but, you know, you're a technology company, we've got shareholders, we're there to make money and make profit, but you can still have probably a fairer offering to the public, and you're more efficient, and sometimes fees can be slightly lower, or you can challenge existing fees and create a competitive dynamic. So if regulators don't keep up with that, then ultimately customers lose out. So I think there's some clear things that should never change, but yeah, regulators continuously need to keep up. But that needs to be tangible. If it's a sandbox, it needs to be a real sandbox. Let's see that in action, and you do see that around the world. So that's kind of how I would see it from a practitioner perspective.
Thank you very much. Look, I'm afraid, gentlemen, we are out of time. Thank you all very, very much indeed. Really comprehensive briefing on what's going on in these quite extraordinary times and some of the opportunities which will emerge from it. Thanks to all the attendees and participants, something that about 90 at its peak. So a good crowd. Thank you for those who have asked questions and got involved. Really very good to see you all. Please stay safe. So my thanks on behalf of all of us who participated to Arif Amiri, to Ali Hassan, and to Dan McLaughlin. And all of you, have a very good day. Stay safe, and we'll be in touch soon. Take very good care. Bye-bye.